So, of course, we've been talking about Transcorp Power Performance Annual General Meeting. We just had Peter Ikenga, who is the MD of the company. We continue the conversation, also discussing FBNH as well. So we're talking power and the financial sector with Mr. Johnson Chukwu, Group Chief Executive Officer of Cowry Asset Management. Mr. Johnson Chukwu, it's good to see you again, sir. Good evening to you. Thank you so much for joining us. So, you know, we're just talking to the Transcorp MD CEO, Transcorp Power, just a moment ago. I wanted to get your thoughts on the company's earnings, operations. You know, what do you make of how it's been performing?
Thank you, Lotus, for having me. I would say that the results of Transcorp, their full year result and their first quarter result are quite impressive. Principally because we are seeing increase in top line, that's in revenue, faster than the increase in cost, which simply means that the charge-out rate at which they are bidding power supply to the bulk trader is at a rate higher than the rate of increase in gas cost of gas. And if you are seeing a company that's witnessing an increase in revenue and a decline in cost, then that company is creating a blue ocean. That means the company is on a very strong growth trajectory. If you look at the performance in the first quarter of this year, Transcorp did about 66%, about 2/3 of their full year result in the first quarter of this year. Last year, they made a net profit of 30 billion. This year, first quarter of this year, they already made a profit of 20 billion. And if you, like I said, if you look at the top line, they are growing the top line faster than they are growing their cost, which is quite impressive. Of course, there are also still challenges if you further dimension their balance sheet. But clearly, in terms of revenue, they are witnessing a strong revenue growth. In terms of cost, they are managing their costs. All they just need is further manage their receivables. We saw more than 1.4 billion in receivables, which clearly indicates that the rate of payment from the bulk trader to the generation companies is quite slow. Of course, we also saw a high level of payables or account payables, which will mean payment due to the obviously gas suppliers. But on a balance, I think in terms of performance, profitably, the company is on a strong footing.
How are you viewing the power sector? Do you think it holds opportunities for other players? I mean, I know we talked about, you know, there's headwinds here and there, but what's your overview of Nigeria's power sector as far as, you know, private sector being able to make, you know, be profitable?
You know, interestingly, we saw a government that has the courage to increase tariff. We're talking of about 206 naira per kilowatt hour, which ultimately will benefit everybody in the value chain. Some of the challenges we've had in the power sector that we've not been able to achieve commercial viability in that sector because the distribution companies were unable to reduce the aggregate collection and technical losses, ATC and C. So it then means that we had a lot of leakages or a lot of slag built into the billing, the cost of power. But government increasing the tariff to about 206 naira per kilowatt hour for the band A simply means that there's a full recovery of cost, particularly for power sold to the band A, and that should incentivize the distribution companies to improve their aggregate technical collection and commercial losses. If they improve on that, then ultimately they'll be able to pay the power generation companies through the bulk trader. And the power generation company will pay the gas producers or gas suppliers. And then we'll have a strong power sector that will allow for resources to invest further in the power sector. That will also incentivize banks that are providing credit to those operators to provide additional credit and get to the point where they will become commercially viable. So the challenge we've had is that we've not achieved commercial viability, which is why the government has continued to, at intervals, pay for power supply that we're not able to be paid by consumers because of so much of wastages that the consumers are sometimes billed to pay. But some additional work needs to be done. We need to weed out the discos that do not have the financial capacity. Additional capital needs to go into the distribution segment of that entire value chain. Because the weakest link we have today are the distribution companies and the transmission company. And government has to also take a decision to invest in the transmission grid. There was a time we were talking about 750 megawatt transmission grid, which was going to be a super transmission grid. I think government has shaped that. But even you will have to improve on the 133 kVA transmission grid, or 132 kVA transmission grid, and they improve on the major the transmission facilities, then we should have a stronger power supply industry or power sector industry. But as it stands today, that sector, maybe the power generating companies, because the bulk trader ultimately pays them at the end of the day, they seem to be a bit insulated, not fully insulated from the weakness occasioned by the transmission network as well as the distribution network. Remember that many of them have entered into contract with the bulk trader on buy, take or pay. Whatever power they generate at their gates, it's either the bulk trader either to pay for it or take it or pay for it. And that has, to some extent, insulated them from the challenge of that entire sector.
Thank you for that. What about you mentioned transmission. Do you think the government should step out of the transmission and that should be privatized? You know, there's been a lot of talk around the transmission company of Nigeria being, because of its deficiencies and so on. What's your take on that area?
Yes, I think the first thing is that we need to break up the transmission network. The current situation where we will power to Osogbo and distribute from Osogbo is not efficient. We should have regional transmission grids. So, for instance, the Southeast, the South-South, the Southwest, the North-Central, and all those regions should have their transmission grid. And if they can generate power within their network, they have some level of island mode operation. So you generate and feed to your transmission grid and distribute within your network. And whatever surplus you have, you now feed to the national network. We need to first start at that. And then those regional transmission grids can now be privatized to other private sector operators who will now invest further to strengthen them.
Mr. Johnson Chukwu, I could talk to you about power for the next hour. You have such a vast knowledge of all these different sectors. We'll have to get to banking, which is also your area of expertise. What do you make of FBN Holdings' full-year performance? Big jump, above 300 billion profit. I think that's the highest in their history or so. How are you interpreting their numbers?
Well, I think FBN has actually turned the corner sufficiently well. Of course, there are still historical issues they have to deal with. If you look at the FBN report, you realize that their gross interest income grew about 57%. The interest expense grew at a rate higher than the interest income, which means they're going to have a depression or compression in their net interest margin. But that was compensated by non-interest income, commissions and fees about 220 billion. Of course, there was a cost of commissions and fees about 3 billion. But then they also made good income from exchange-related gains, revaluation of assets, trading assets, and exchange loss. So net of that, you have about 350 billion. But there are still areas of concern we have to recognize, one of which is in terms of impairment cost. We still saw impairment cost of over 200 billion in the full year. But give and take that you saw a jump in profitability about 310 billion. Like you said, is the highest they recorded so far. And the key thing you have to look at is that they still remain a major player, dominant player in terms of revenue. Because one of the things you look at when you want to appraise and compare the performance of a company within an industry, you have to look at the share of gross income. FBN Holdings' share of gross income in the industry is still quite strong, which also shows that they have, and if you look at their commissions and fees, it simply means they are making a lot of income from non-fund-based activities, which is an indication of the size of their customer base and the size of their alternative delivery channels and other service delivery facilities or capabilities.
Mr. Johnson Chukwu, Group Chief Executive Officer, Cowry Asset Management, always a pleasure talking about the different sectors of Nigeria's economy with you. I thank you so much for your time, sir.